Just tell us the impact of that particular cut, sir.
So 2 weeks and 2 negative news flows related to city gas companies. On April 1st, we saw that APM gas price was increased to $6.75 per MMBTU from $6.50 per MMBTU. While that was on expected lines and it was announced as per the recommendations made by Kirit Parikh panel in 2023. But now this APM gas allocation cut has come as a surprise for city gas companies. And in the last 1 year, APM gas allocation has been reduced by almost 50%. In the beginning of 2024, the gas allocation used to be in the range of 70 to 80%. Now, after this cut of 18 to 20%, the gas allocation for city gas companies is reduced to 40%. So MGL says this might have an impact on profitability. Same comment is made by Adani Total and IGL as well. CLSA believes that these companies, especially IGL and MGL, might have to take a price increase that might be less than ₹1 to pass on this cut in APM gas price. While Jefferies believe that it won't be that easy for city gas companies to pass on the APM gas cut. Also, it builds in flat EPS estimates over FY 25-27. But the question is the cut done, or there might be a further APM gas allocation cut we might see in the future?
Well, that's right, sir, and that's weighing on the stocks as well. Will there be further cuts in the time to come? Prakash, what do you think? To be fair, these stocks actually have seen a bit of a recovery from the low point of the day. Mahanagar Gas is still under pressure, but IGL is almost at the green. It's down only around 1%. What's your view?
Nigel, of course, this is definitely a setback. 18-20% coming at subsidized rates or at much lower rates is definitely an advantage that they lose out on. But then, I think the reaction has been a bit strong because nobody saw it coming. We were talking about pricing being, discussed as part of the Kirit Parikh committee. But this, the allocation itself was not something which was on the cards. But I can also tell you the relief is that globally, LNG prices are likely to be much lower. It's just the logistics cost that's probably not yet kept itself in tune with the glut that you are anticipating in LNG. If that were to happen, this might not be so much of a setback. It will probably get diluted because your market prices itself will be low. You look at how this, and this is one of the reasons because the regulatory overhang that these companies really don't trade at very rich multiples. Even on a trailing basis, I think MGL would probably be under 12 and IGL could probably be close to 14. So that's one of the reasons why such large companies with high replacement costs also don't get great valuation because of this. What I like in that space, and just to give you a different perspective, is companies that have gas allocation already tied up and fully stitched up. And then there's a company which has recently come into the listed space called IRM. IRM Energy is something which is fairly new. Got listed on the RARA days of great IPO listings and went all the way to 600 plus, I remember. But then, of course, it's now realistically at lower valuations and reasonable valuations, and it has some potential to kind of grow from here as well.
Prakash, what about IndusInd Bank? In 2 days, stock has rallied close to about 12%. The street is looking forward for some sort of a cleanup. What we've learned from sources is that some senior level exits will take place. Succession planning is anyway, is on track, perhaps will happen. Your thoughts on IndusInd Bank after this kind of an up move in 2 days?
So, Rima, this is reminding me of, as kids, we used to have some of the kids in the class scoring very poor marks, almost failing or probably failing. And then the parents would come for a recheck on the exam paper. And somehow, there would be some incremental 2 or 3 marks getting added, but they would still fail. So, the derivative damage, the damage on account of the derivative portfolio has been significant. But now that the audit has found that it's probably less than what the management anticipated or in line with what the management anticipated, the market's probably seeing it as a little bit of a relief. But let me tell you, whatever is happening is going to be extremely difficult for the bank to come back and get its mojo back in terms of being competitive in an environment where everybody is seeking credit growth, which is not coming easy. And now the cost of funds is going to become much relatively easier for even the bigger ones like Kotak. Kotak has one of the highest cost of deposits or cost of funds, about 30 basis points higher than probably the other private sector banks. But if they were to be so competitive, I doubt if IndusInd could see growth. So anemic growth, a little bit of repair that might take time. So I don't know whether you should get excited. Of course, there's recovery, the short covering, whatever you call it. But fundamentally, I don't think it's out of the woods yet. So I would stay away for some more time.
All right, Prakash, I wanted to ask you about these wires and cables players. Earlier this morning, one of the stocks that were looking interesting on the charts was Havells, because yesterday there was big delivery-based buying. There were a couple of sell-side notes that were questioning that investment into that solar part of the business for around 600 crores, which was 25% of the cash in books. And they were questioning the rationale. So yesterday we did see some shorts get into the system, but then they gradually covered up. And in fact, if you compare yesterday's low to today, the stock is 6-7% higher from that price itself. It seems the street is sensing better set of numbers. You like anything? Remember these stocks, when there were new players coming in there, they got hit hard. But now they're bouncing back, Havells, Polycab as well.
Don, you're absolutely right. It's a great observation because, the incumbents were likely to kind of impact some sort of a market share shift. While we very clearly know how it's happened on the paint industry, which is much more smaller, whereas organically cables and wires is set to grow faster and have a much wider footprint, given that it's unorganized to organized as a team that's working. And if players in the organized sector kind of add to that heft, there's no reason why the sector won't grow and everybody won't grow. The only thing is valuations were stretched. There was a trigger to rationalize that. But, the best way to play this, Nigel, is to look at some of the players that supply a lot of these specialty polymers to cables and wires. The overall market is growing. Newer players are setting up capacity. They'll become much more quality conscious and fine-tuning their delivery, the product delivery. And that's where specialty polymers will start looking at. So one of the companies that does this specialty polymer space, and globally it's a trend that's happening. They're making a comeback within that pocket. It's a very narrow field, but look at Supreme Industries, for instance. It's kind of off from its highs. It's closer to its 52-week lows. Just started kind of limping back into reckoning. My sense is you'd rather play with something which supplies a lot of the raw material to these companies tend to straight away go into that competitive environment of cables and wires.
By the way, I think that China headline is what has sparked this move, right?
Yeah.
There was that headline on Bloomberg which said that, and this was all source-based because I was looking, US futures also perked up around that 150, 155 mark. Essentially, China saying that they're open to talks if some of its conditions are met. And one of the conditions is interesting, show respect. That's but it's true. Show respect, appoint a point person, rein in your sort of cabinet members from making statements, be more consistent with China. And of course, they've thrown in Taiwan as well. Taiwan has got to be on the table for these trade talks. So it looks like, it's still, I think market got excited because it shows willingness to engage on China's part. But we don't have official confirmation. One, this is, as I said, is a Bloomberg story, quoting sources. But it'll be interesting how this goes.
Interesting comments coming in from the Chinese representative. But I also want to hear what Trump has to do because he's tried everything, right? He's tried to cut down on the taxes, on the expenditure dodge. Then in fact he's tried to push through these tariffs. And he's got a problem because he has to, roll forward some part of that debt as well. So he's throwing everything at it. And actually his plan was going well, till the yields spiked up. So,
but analysts are also pointing out that there will be pressure now from the industry, the tech industry. For instance, Nvidia share prices are down because, the restrictions will hurt their exports into China. China has now disallowed, imports from Boeing and other aircraft. Yeah. So, even these industries will put pressure on White House that guys go ahead and now, strike some sort of a resolution, some sort of a deal, because it's hurting both sides of the equation.
Indeed.
It's a fluid situation, but I just wanted to sort of put on the table the reason why I think we got a bit of a pop. U.S. equity futures jumped about 1.25% on those headlines. And I think we are seeing a bit of a move across the board in other markets as well. So that's what we have going. Prakash, any thoughts on anything out of the PSU space you like? Banks or otherwise?
No, banks there's enough that's been discussed, but I would still look at some of these smaller private sector banks which are far more agile to take advantage of any kind of an arbitrage they get when interest rates start softening and the lending rates are continuing to kind of be slightly firm. So, the likes of CSB, and, if your risk this thing allows you profile, then probably a South Indian bank. But, banks aside, I think the PSU pack is something which will see a lot of money getting allocated, Prashant. And for the simple reason why I say this is that it remains largely resilient to tariffs or whatever uncertainty related to tariffs that we are witnessing. And secondly, the government allocation on capex is starting from April. It's just started from April, and that is likely to kind of start showing strength. Look at some of these power players like NTPC and all, and we are going to peak summer, power usage, and the power demand will kind of again spark a debate on whether we have adequate power supply. So whether renewables is contributing or not, it will continue to contribute. I'm not saying that's going to go away, but some of these companies, some of these facilities, utilities will start kind of getting valued much more. And hard assets is what you need to be into, and utilities is probably one of the best. I would look at some of these companies in softer times.
Okay, we'll slip into a break. Prakash, thank you very much for joining in. The gains are getting bigger now for the, at least for the banking names. IndusInd Bank, 7.5%. Axis Bank has a gain of close to about 4.5%. SBI is advanced over 1%. So things are looking up, at least for the banking pack, and that's pushing up the overall indices. Get into a break. On the other side, we'll touch base with Varun Goyal from Mirae Asset Investment Managers on the other side. Welcome back. Gold prices continue to climb and now touching close to $3,300 per ounce, setting a new record. Record after record every single day, Manisha, when it comes to gold.
Oh, well, yes, and the gold prices should come in on your screens, Rima, because it's not 3,300 anymore. It's above 3,300. And just before I checked, before I came here, it was trading at 3,315. So there you have it. It's an all-time high yet again. Every time we've talked about gold today, it's hit a new all-time high. So 3,315 to this point is an all-time high that we've seen in gold. 2.5% of gain on your screens. And that price of gold on MCX at 95,000 rupees per 10 grams. Less than 5,000 rupees from a lakh rupees at 10 grams is what the markets are looking at now. Actually, when you step out to buy gold today, it almost is at a lakh, because to this price, you have to add 3% GST. You also have to add even minimal making charges, and that's already taken the prices to a lakh rupees. You know, this run up to 3,300, the last $1,000 an ounce of a run up that the gold prices has seen has been the fastest, has been done in a shortest gap of time. We've seen prices gain up by almost 26% now in this year, and this compares to 28% of gains in the previous year as well. So that is what the month of April has done in last many years. With that chart, I show you that. And as you can see, it has been a steady and subtle growth in all of these years there. But the last 1 year, the last 12 months, and that 42% of gains that you see in the last 1 year clearly has been the fastest run that gold has done in a lot of time there. Well, various factors supportive, of course, are the tariff concerns, tariff leading to recession concerns, and then the markets also are looking at decline in dollar index. The geopolitical tensions have just about continued. And also when you look at the chart, from 2000 to 2025, in these 25 years, it has been only 2 years that gold has given you a stronger negative return. Apart from that, the other 23 years have been on the positive side. So that pattern also tells you that investing in gold is on a stronger side. The ETF buying has been strong. The global central bank has been buyers for last 3 years now, and 1,000 tons of gold every year being bought by global central banks. So everywhere that you look, we're looking at very positive cues coming into the market. Uncharted territory, not too many people want to talk about where the gold prices can go. People are talking about correction from here as well, but the momentum is still on the higher side. And with 3,300 already done, the next targets on the street now are 3,500, 3,700. Extreme cases can take the gold prices to $4,000 an ounce as well, are the conversations that we're hearing.
I heard, Manisha, you put out that 8,000 target 3 years out, right? I remember that.
Well, yes, you know, the next 2 or 3 years.
That's a 40% CAGR.
It is. It's by 2028 and 2029. I mean, even if we don't grow on with these kind of, speed, even then, I mean, that's a possibility.
I mean, Manisha, thank you very much for that. Varun Goyal, Senior Fund Manager, Equity and Mirae Asset Investment Managers, is with us. Varun, it's tough competition. I mean, you go to a client and ask him for money, you say, well, it's a hard pitch to beat gold.
Good afternoon, Prashant. No doubt gold has been a phenomenal asset class for Indians, especially because of the benefit of rupee, and has been phenomenal returns in the last 10, 20 years. No doubt about it.
But are you seeing... Did you, as an analyst, right? Purely as an analyst, what is your sense? It's not exactly your area of specialization, but I mean, I'm sure you got an eye on it, right? Manisha described some of the areas of demand. Central banks are a big area. Of course, I mean, there's always retail demand both in India and China. But what's your sense here?
Prashant, as you rightly mentioned, I'm no expert on gold, so I'm just an admirer of gold prices like you are. But equity, maybe that is based on what has happened in the last few months. Maybe we are looking at a low double-digit kind of earnings growth this year, and hopefully, that should lead to a much better equity outlet sentiment as compared to what we have at this point in time.
Okay, let's just talk about one area which, of course, is leading, which is banks today, Varun. I think we've got deposit cuts from SBI, HDFC, and now ICICI. So I guess that takes some of the, create some buffer at least, because you've got to cut lending rates as well. What is your sense? Is interest going to really come back into the space, and any ideas here?
Yeah, I think broadly what we're seeing is a very significant easing of both liquidity and interest rates by RBI. We've already seen 50 basis points of repo cut already. Our sense is there'll be at least 2 more during the course of this calendar year. So I think calendar year 25 will see almost 100 basis points of repo rate cuts, and already RBI has done significant easing of liquidity. Various non-rate measures, stricter controls that imposed in the last couple of years, they have been kind of taken back. So I think we are looking at a banking system. We should see improvement in credit growth for this year. I think deposit growth, it seems to be finally catching up on the credit side. So I think overall outlook for the banking space, both banks and NBFCs, looks quite positive for calendar year 25, and we expect strong earnings growth to come by in the next 4 quarters.
What about IT? TCS sounded the cautious note. Now all eyes on Wipro today, tomorrow Infosys. What have you made of what TCS said, and what do you expect for the next 3 to 6 months in terms of just pure commentary from IT companies and what that will mean for earnings and valuations?
Well, there is no doubt that the IT space has corrected quite a bit and the valuations have become very reasonable. But I guess it's very difficult to say how the the tariff scenarios will play out in the next 3 to 6 months. So it's very difficult to take a call on the overall US GDP growth and the global economic growth. So I think from that point of view, there is some amount of uncertainty will sustain. Some of the larger deals may get pushed back. We might see smaller deal sizes and stuff like that. So I think at this point of time, while the valuations have become fairly reasonable, one may want to take a more cautious stance and revisit the sector once the dust has finally settled on the tariff scenario.
The index itself is, I think, down some 25% for the year so far. And there's no, commentary will be interesting to see. TCS, for example, said, okay, FY26 will be better than 25. We'll hear from Wipro today. Infi reports post-market tomorrow. If actual numbers are worse off than what we're expecting, do you think there is downside here? We can revisit the recent lows, or they could be. What is your sense?
Well, I think for FY25, most IT companies, large cap companies, will deliver a low single-digit kind of US dollar revenue growth. And I think for calendar year, for financial year 26, at this point of time, there are all kinds of scenarios built in from -2 to, let's say, +3, +4 kind of dollar revenue growth. What exactly will be the number? I think it's very, very difficult to take a call on how the tariff situation in the US GDP growth will play out. So I think it's still very early. Let us wait for the next 90 days, what kind of bilateral negotiations the world does with US and what is the impact finally in the US economic growth and the global economic growth. I think if you look at the multiples, I think the IT sector has now gone down to the 10-year average valuation multiples. So there has been a significant re-rating of the IT sector post-COVID, and the valuations were at least 20% premium to the pre-COVID multiples. I think the good thing now is that the multiples have reverted back. The uncertainty on earnings growth, of course, will stay for some more time. And I think this quarter, while we expect most managements to talk about the current environment, but the situation still continues to be fluid. The next, I think 2 quarters will be very, very important from how the whole year will look out to be, and maybe a little more going forward. So we will, I think, as of now, maintain a slight cautious stance on the IT space.
Okay, Varun, we leave it there. Thank you very much for joining us. Good conversation as always. Appreciate your time here on CNBC TV18. Well, I think what we're going to do is play out some sound bites. We had the Steel Secretary, Government of India, with us earlier today. Sandeep Pondrik told us the safeguard duty, which has been recommended, they are under examination. A decision is expected in the near future. And of course, there's a question of whether actually the rate of can be 20% instead of the 12% which has been recommended. Of course, they can't say anything as of now. And there was, some other questions in terms of specific situations as well. Listen in.
DGTR has recommended 12% safeguard duty on certain products and with caps on prices of those products. That recommendation is under examination in the government. I think in very near future a final decision will be taken on that. On your second point about 20%, I really don't know, because it's as you know, the DGTR process, the safeguard duty imposition process, is a sort of a quasi-judicial process, and DGTR has heard everyone, asked for objections, and after that they have recommended this safeguard duty. I don't see any reason for the rumors about 20% safeguard duty. The per capita consumption in the country now is more than 100 kgs per person, and it has been seen with respect to other countries that when a country goes at this level of 100 kgs per capita consumption, then the elasticity with respect to GDP growth rate increases. So till now it is 1.2, 1.4. Now I expect that the elasticity will be more than 1.5. So even if with that, if you see our GDP growth rate around 6.5 or so, then the steel consumption should grow about 10%. RINL, as you know, that government has given a lot of money to RINL to keep it as an ongoing concern. So I don't see any possibility of immediate merger. That decision is not there in the government. Similarly for NSL, so for now, no such talks are, or no such thing is happening in the ministry for merger of these three. As you know that the 21 decision of cabinet that NSL will be divested still stands. However, not much progress has taken place on that front.
The Steel Secretary is saying it as it is. No hopes of that safeguard duty going from 12 to around 20%. There's no talks with regard to a mega merger between SAIL, RINL as well as NMDC Steel. And also saying that he's quite optimistic on prospects of consumption here in India. He expects a double-digit or a 10% plus growth in steel consumption here in India. Well, time to slip into a short break. On the other side, dealing room chatter is waiting for us. Nimesh has got an update with regard to markets as well as a few stocks. We'll also get our technical expert back on to give us some buy and sell recommendations. Welcome back. Well, another day, and it appears another day we're going to end at the high point of the day. So this market is actually looking good because on a day-to-day basis, you see the surge that comes in the final hour of trade, and the last tick actually is at the day's high. And as we speak, we're up 110 points odd. Nimesh is with us to help us out with what he's picking up in D-Street chatter. Well, Nimesh, what are you picking up on flows?
Hi, Nigel. Another strong day, again largely led by financials, and I'll speak a bit more about the financials because if you look at yesterday's data as well, the FI and buy number was close to 6,000 crores, and 50% of that buying was largely in the private bank names. Same is the trend today as well. I understand at least in two large private bank stocks, there are bids worth thousands crores each, at a leading FI. So again, looks like the buying is largely focused towards the financials, and within that the large private banks. From a flow perspective. So again, you might see a significantly large number from FIs in today's market. Even the broader market has turned a bit constructive in the last couple of days. And again, the feedback is now there is a bit of commitment as well coming in from larger HNIs into the broader market stocks, and that's showing up in the individual names as well. The breadth is again positive today, and a lot of individual stocks are buzzing in trade, 5%, 10% up in the last couple of days. So clearly there is momentum back in the broader markets from retail and HN investors. Of course, we have a big earnings season to watch out for. Wipro today, Infosys tomorrow. So again, IT will be a big sector to watch out for. But in general, the earnings season is going to be quite critical for the near-term momentum. But purely from a flow perspective, it's towards the financials, and a bit of traction is back in the PSU stocks as well.
So Nimesh, we'll watch for IT, particularly Wipro tonight.
Yeah.
But what about other stocks? What are dealing rooms talking about in terms of buzz?
So in terms of individual stocks, remember the first stock on my list is Pratap Snacks. So that's been buzzing in the last couple of days. Flat today, but the stock was up 8% yesterday, has recovered very sharply from the recent lows. And again, some HNI seems to be quite active buyers, but the big buzz on the street is that maybe you'll see a corporate development very soon. Again, a potential change of ownership could be on cards for Pratap Snacks. So that's the reason why that's been buzzing off late. The second stock is NBCC. I spoke about buying interest back in the PSU basket. NBCC stands out. Very aggressive buying at HNI desk. Some large HNI investors have turned active buyers as well. And also for NBCC, there is a very strong buzz that the company is likely to bag a large order very soon. So that's a trigger there. The third stock is Akum Drugs. Again, a big move in the last couple of days. 10% was up 10% yesterday, 5% up today as well. The volumes have picked up. I understand there was a clean-out trade from a leading FI who sold out, and some domestic funds and some large HNIs have bought in the last 2 days into Akum Drugs. And the last is Tata Motors. Within the auto names, this is one stock which stands out in terms of aggressive selling. So for second day running, there is delivery-based selling from larger FIs in Tata Motors.
All right, as always, interesting list there. Nimesh, thank you very much for that. So Pratap Snacks, as Nimesh pointed out, is the one where perhaps we may see some change in ownership. Nimesh, this is the one where we saw change of ownership recently, right? I mean, you had two large HNIs who came in.
Yeah, yes, Prashant. So there was a large block. The PE got exited. The entire PE stake was bought by two entities, and then there was an open offer as well. The open offer is closed. I mean, there was hardly any participation in the open offer, but now I understand there could be further change in ownership with regards to Pratap Snacks.
Okay, all right. We'll see how this one goes. But on the radar now, as are a few other things like IDFC First, for example, which is, of course, the board meeting is tomorrow. And we've been highlighting that with Nimish earlier on as well. All right, let's talk about what to trade in terms of here and now. Mitesh is here with some BTST trades. Mitesh, what do you have? Okay, I think we lost that line there, so we'll try and reconnect. But maybe if Yash is with us, we can just quickly recap, two insurance results, ICICI Pru Life and ICICI Lombard, both from the same group. Yash, take us through what both reported.
Well, both, insurance companies from the house of ICICI reported their results yesterday, just, with a gap of about half an hour. But the reactions are very diverse today in terms of how the stock price is moving. For ICICI Prudential Life, if I have to describe the results in one word, weak growth when it comes to the fourth quarter, but strong margin performance. The reason why the stock is higher in trade today, there are three important reasons. First one, the margin performance has been very strong. On a year-on-year basis as well, the margins have come stronger. B, the expectation was, lower, and this particular margin performance has managed to beat that expectation as well on the positive side. Second reason is strong management commentary when it comes to the management coming out and saying that, they will be able to outperform the industry average growth in FY26. Third one is the positioning itself. The stock was down 14% in the last 3 months. The fear about margins seems to be non-existent, at least as far as the Q4 result is concerned. And hence, the stock has sort of, picked that up and is moving higher in trade today. For ICICI Lombard, it's a strong Q4, when it comes to growth as well as the underwriting performance. But the reason why the stock is lower or under pressure today, first one, the stock has been flat in the last 3 months. So positioning-wise, of course, it's on the negative side when it comes to, the stock moving today or reacting today. Second is the uncertainty on the motor insurance portfolio. The biggest portfolio, about 40% of the book. But how will it pan out in FY26 with auto sales being a little disappointing? There is a lot of uncertainty in terms of how motor insurance portfolio for ICICI Lombard will work out. Third reason, no certainty again when it comes to revision in prices for motor third party. The company and the sector has been expecting a revision for a few years now, hasn't happened again for FY26. There is no certainty, no word. The management also on the channel said the same thing on how the prices would be revised in FY26, if they would be revised, at all. And that is also playing on the stock today.
Thank you very much for that. And let's talk about Wipro. That's the one to watch. Well, on the top, expect a subdued quarter. One, because Q4 is seasonally weak. And two, because of the macro uncertainty. As TCS said, some projects which were expected to start got pushed forward, got delayed. Decisions are taking longer to close. The sales cycle is getting elongated. And that hurts sentiment towards the end of the quarter. And that would be seen even for the rest of the IT pack. So for Wipro, expect a revenue decline quarter on quarter, but within the company's guided band. Dollar revenue growth seen down 0.5%. Constant currency revenue growth seen down 0.2%, but within the company's guided band. Now, again, when your revenues are not growing, there is pressure on margins. So EBIT margins are likely to decline by 40 basis points to 17.1%. But the street will track the Q1 guidance very closely. Now, consensus appears to be -1 to +1%. But remember, these numbers were set before the uncertainty got ratcheted up. The numbers came in, most of the analyst notes came in very early part of April. And since then, we've seen a lot more volatility and uncertainty. So will the management be conservative? So don't be surprised if the guidance turns out to be a little worse than -1 to +1%. Also remember, Wipro has a little higher exposure to discretionary demand because of the Capco acquisition. Capco is a consulting company that they acquired in Europe, and therefore the company has a higher exposure to discretionary demand. So what the company says on that would be watched very closely. So that's Wipro for you.
Okay, all right. Thanks a lot for that, Rima. Well, let's get in Mayuresh Joshi, who joins us on the show. Hi, Mayuresh. Good afternoon. Good to see you, Ben. What's your view on tech? You hear diverse views. One is that valuations now have come into its long-term averages. On the flip side, there's so much uncertainty. Why would you invest in IT when you're going to get minimal growth and the stocks are, not trading extremely cheap? Which way would you go?
Afternoon, Nigel. No, I think we're clearly on the sidelines. So I think for a whole host of reasons that Rima just mentioned, the expectation largely is that even if the recovery starts coming in for the sector as a whole, that will be back-ended probably in the second half, as we see in this financial year itself. And therefore, I think to probably forecast some element of earnings recovery happening, assuming there are a lot of headwinds in the next few months, what happens to client order wins, what happens to pricing, what happens to margins, what happens to the bench strength in terms of utilization levels as well. And therefore, I think when you're navigating through a whole host of these factors, which remain rather uncertain as we speak, that uncertainty element is something that the street might not want to believe in at this juncture. And therefore, I think our own take is that the back-end recovery might only happen in the second half of this financial year. A large part of the price damage, in our opinion, is already done, Nigel, with the IT stocks. So to a certain extent, it might be a time-wise correction that a lot of stocks within this space might go through. But a few of the mid-cap IT stocks, which are showing relative strength as we speak, and if they deliver on numbers and if the commentaries are good enough as well, might actually be outliers in the whole scenario as we speak. So I think we will watch out for mid-cap IT, specifically stocks like a Persistent, Coforge, or an Emphasis.
Mayuresh, this entire move in the banking names, HDFC Bank is quietly up almost 25% from its lows. And so are many other names. IndusInd, of course, it was a very shocking move down, and it's a fast move up, some 15% in 2 days. And of course, others are doing well. Any thoughts here?
Afternoon, Prashant. No, again, I think banks as a consensus as a space probably remains on the radar for every investor and analyst on the street. I think there are 2-3 reasons why a lot of people are probably even looking at banking stocks. I think the first primary reason is expectations in terms of a strong recovery that you've probably seen in deposit trends. And the deterioration that you've probably seen in the overall CASA book over the last few quarters, I think that should largely be behind us. So it's going to be the next few quarters might be a periodicity where I think you might see actually deposits coming back to normalization. And therefore, I think the bottoming out of the CASA deterioration as we speak. the advances deposit ratio should improve. The second element, obviously, is in terms of the risk weights that a lot of the banks had assigned earlier, and with the regulatory tweaks that have probably happened as we speak again, there is expectation that with the tweaks that have probably happened, asset quality pressures should probably remain stable or, in fact, start going down because of the strong credit underwriting that we've seen for a large part of the universe. And this will also probably abet a large part in terms of provisioning that a lot of these banks have probably done, therefore driving down the cost to income ratios. Last but not the least, I think the expectations with the rate cut that we probably see in expectations that there might be a couple of more rate cuts as we head into the next few months might actually mean that NIMs might actually stabilize and improve going forward as well. And that probably might also indicate that stronger liability franchises might actually do well in the next few quarters as well. So I think we remain optimistic. I think the rating rankings for the entire sector look pretty decent. It's one of the strongest sectors in the strongest quadrants, as we put it, as far as earnings are concerned. And therefore, large leadership stocks, as we've always believed, as per our philosophy, stocks like an ICICI Bank, stock like Kotak Bank within the private name, State Bank of India, Bank of Baroda within the public sector names, might actually fare well over the next few months.
Mayuresh, do stay on. We need to slip into a mandatory break before close. But as we do that, here is some good news for all our viewers. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. Get instant access to our news, all the articles, financial world updates at your fingertips. So download the CNBC TV18 app now from the Apple or the Google Play Store, or you could just scan the QR code on your screen.
The iconic line from Top Gun. Was there ever a moment, in that phase where you were creating this movie-going experience, where your father maybe told you that, son, you're writing checks that your body can't cash?
He made me cost conscious. He made sure that I didn't spend that kind of capex, that there'll be no returns.
A lot of the scale has been driven by way of M&A and acquisitions, and of course Inox was the big one.
Yeah.
What would you say have been the non-negotiable?
I think non-negotiable right from the beginning was to stick to the fundamentals. And I was really privileged to have somebody like Renuka and Vishal Mahadevia, who's Warburg Pincus,
yeah.
and mentors like Sunil and Rajiv Singh and so many people. Fundamentals, unit level economics. So when I was doing organic growth as well, location has to be right, the rent has to be right, developer has to be good, development has to be good. That was organic. Inorganic also, am I acquiring something which is going to be value accretive or value destructive? Is it an ego, vanity acquisition, or is it something that is missing in the current portfolio and is going to add value?
Okay, welcome back. There's about 6 minutes to go for market closing, and it's clearly a bank-led move. The Nifty is up 0.5%, but the Nifty Bank is up 1.5%. So that's the extent of outperformance that banks and financials have really seen today. And I mean, if it goes like this, the Bank Nifty will be first off the indices, which will basically get back to its previous highs. So, wait for that as well in that sense. PSUs, NBCC is something which stands out. It's got a very strong move, 7%, and very strong volumes as well. I think NBCC was part of Nimish's chatter list as well. So that has been doing well since the morning. EIL, actually there are a lot of these PSU names which are participating. Dredging Corp is another one which is about 8% higher. And all these have got volumes as well at this point. So GMDC is up 10%, another PSU name which is looking good. Anything stands out to you, Mayuresh?
So within the PSU pack, Prashant, I think our take is that PSU defense names might actually continue doing well. I think the only risk factor for these names is how they are able to execute. But apart from that, the revenue visibility in terms of their order books stands very, very solid. The robustness in terms of the margins at which these orders have been obtained will probably mean that the margin performance, if they're able to execute well, will continue at a good pace. And that will probably affect directly in terms of bottom line growth. So I think the earnings growth, where there is a lot of concern on how earnings will probably grow for certain pockets within the market, if PSU defense companies might execute well in the coming few quarters, I think the earnings growth sustainability argument probably would stay with them. So I think a few of the select shipbuilders, as an example, is something where our belief is that the rating rankings, institutional holding look extremely, extremely strong. And therefore a little bit more positive in the defense PSU space as we speak.
Okay, all right. Mayuresh, I wanted your view on some of these paint companies. They were big underperformers because you had a new large player that was coming into their space. And they underperformed in the last couple of years. But if I compare, Berger Paints, I think, is up close to around 15-20% in this year, which is much better than what the Nifty has done. You have Asian Paints as well that's pulled back. Remember, these stocks went through a period of big underperformance. And now you have the tailwind because crude oil prices are lower. And the hope is consumption picks up in the second half of the year. Your view on any of them?
So yeah, you're absolutely right, Nigel. I think the combination of the cocktail of these reasons that you're putting through, with crude prices coming down, titanium dioxide prices have come off quite significantly. So adjusting for inventories, probably for this quarter, if crude prices remain lower, the expectation is that a large part of their input cost, which is almost 20-25%, comes off quite significantly, which probably upsets their margins pretty decently. On the other hand, with the tax cuts that are expected to come through and start getting played through as we start this financial year, specifically, I think the second half of this financial year, where the expectation is that with a combination of good monsoons, rural consumption, urban consumption, and semi-urban consumption expected to come back roaring. I think a lot of these discretionary companies, paint companies as an example, as you put forth, footwear companies as you put forth, apparel makers which are at the lower price range that you're probably looking at, might actually start doing well. And that might actually reflect in terms of better volumes, better pricing at their behest, better margins because of the input cost deflation that we're probably seeing, and therefore better profitability as we head into the second half. So I think operating leverage will definitely play out if these factors stand out. And therefore, I think a base case argument is being made for paint companies, for footwear makers and apparel makers who are probably in that lower price range below 1,000 or 800 rupees.
Okay, all right. I think what we'll do is we'll just quickly wrap up things here. Mayuresh, stay with us. I'm going to come back in a bit. So we'll end about 120 points higher, and that's a 0.5% gain. The Nifty Bank will end with 1.5% gain. The mid and the small cap indices will end with about 0.75%, 0.5% to 0.75% gain in that range. So this is good news overall for the markets and for the indices. In any case, I mean, India, the first large market, it happened already yesterday, but as of yesterday's close, the market had recouped, what it had lost in the post the 2nd of April. It was basically back at 1st April levels, pre-reciprocal, so-called reciprocal tariff levels. And I think we added some more today. So interesting to see how US trades later today, because I mean the mood was generally a little risk off, and those headlines, those China headlines at about 150 changed the sentiment around a little bit. US futures popped about 1% higher. Large cap stocks, IndusInd Bank another 7% gain, so about 14-15% in the last two sessions. But Axis was up about 4% as well. Apart from that, outside of financials in the Nifty, ONGC, Trend, and there was something like Adani Ports, which was up and about. On the downside, there was Maruti and Tata Motors, which were lower, and Hindalco lost in today's session. Broader markets, lots of action. It was clearly, I mean, on the advances outnumbered declines by a big margin, but I'll just look at some news-led hits today. So Zydus Life was down 7%, Lupin was down about 4%. Both launched this drug at risk, and the court ruling out of the US is a little adverse. So they took a knock. And of course, the gas distribution companies, MGL and IGL, were the other two which came under some pressure. There were some other losers as well.